This is your morning brief for Friday, March 29th. Church and Dwight was down. Was up 3.75% yesterday after purchasing Flawless and finishing Touch, a hair removal company, for $900 million. It's not a bad deal. I like it. It's a good strategic fit. Church and Dwight already owns Nair, which is a hair removal type product. $900 million is small in today's world. Church and Dwight itself is a $17 billion market cap company. So this is a tuck-in acquisition. The deal itself is $475 million in cash and $425 million in an earnout. So that makes it even better for Church and Dwight. Why am I bringing this up? Well, in our model portfolios, this was actually our best performer yesterday. Unfortunately, we didn't have Lulu or Accenture, and we like both those companies. We just didn't own them at the time. Those were both way up, and we did talk about them in yesterday's morning brief. Okay, but Church and Dwight was our best performer, and this is a block and tackle type name. So let's talk a little bit about their products. Okay, Nair we already mentioned, so that's kind of like hair removal, goes along with the acquisition. Trojan condoms. The one that everybody knows is Arm & Hammer baking soda. So that is, I don't know why that's such a well-known product, because I really don't know too many people that actually have Arm & Hammer baking soda anywhere, but it's such a well-known product. A lot of cleaning products, so cat litter, OxyClean, so a lot of wipes and sprays and things like that, carpet and room deodorizer, AIM toothpaste. So you get the idea. It's kind of like a mini Procter & Gamble, but it's a beauty. It's been just an absolute gem. It's exactly what we're looking for a block and tackle. It's kind of recession resistant type name. And we've talked a little bit about this in the morning briefs, that there's some data that a recession is it's definitely possible in the next little while. I'm not ready to batten down the hatches just yet, but we're certainly looking for more data and that evidence. If it were to come to fruition, and would want to be in Dwight or Church and Dwight, and you can be in Church and Dwight anyways, recession or not. It's just such a good block and tackle, good dividend, good earnings consistency, good return on invested capital, undervalued, and seems to trade just up and to the right at a steady pace. So got a lot of check marks there. Church and Dwight, have a look at that one. Lyft will finally debut as a public company at a valuation of $20 billion. So yesterday they said $24 billion. Now it looks like it's going to come out at $20 billion. They play this game, IPOs. They always do it. It's not a big deal. There's a bit of a trade-off of the game they're trying to play is, get as much money as they can at the cheapest way, which is fine. That's in your economic interest. That's how you're supposed to act. At the same time, the shareholders that do get in on the IPO, you want to give them a decent price so that when the shares start trading on the market, they go up. And, it's hard to say exactly. You certainly don't want them to be runaway shares. Then if they, 50%, then you as an existing shareholder priced it too low, or as management priced it too low. So anywhere from 10 to 20 is usually, I think that's a well-priced IPO. So we'll see. They're going with $20 billion. It's no profit yet. So hard to do. Well, you can't do multiples. Can't do. It's just an assessment of the addressable market, which is huge. But there's also big competition with Uber, obviously, and Uber's going to have their IPO in a couple of months. So, all right. But definitely follow. DowDupont revises guidance downwards. This apparently is no big surprise to anyone, including us. I run tons of companies through our models, and chemical companies rarely screen well. There's a few of them that do, and we gravitate towards those. But DowDupont has never really screened well. It's not a great return on invested capital company. It's not consistent. It's fits and starts. So this does not surprise me one bit. And apparently the market's not that surprised. The shares are only down 1.5%. So the revision is actually EBITDA growth is now going to be down in the high teens. So it was supposed to be down in the low teens. Now it's down in the high teens. Market's like, yeah, we already knew. Down 1.5% in trading. Okay, Huawei Profit is up 25%. I don't follow this company. I don't even think it trades U.S. So, it's fine. You do need to know about it. It's definitely a big company. It's the biggest technology company in China, and it's been in the news too, arresting and U.S. is saying their security is not good enough, and they're not going to allow them to roll out 5G products with the rest of the group. We'll see. It's such a big player. The products are actually getting more and more innovative, and they're a legitimate competitor to Samsung and Apple. Their foldable phones supposed to be even ahead of the technology of Samsung, which was all over the news with a foldable phone. This one's supposed to be better. So I think this is a real competitor. I'm not sure if the U.S. is legitimately concerned about security or not. I think they're concerned that it's such a strong competitor. But we'll see what happens with that. Futures up as we come to a close in the quarter here. So Q1 is ending today. What a stunning Q1 quarter in the stock market. Markets are up 12.7% for the S&P 500 with 1 day trading left, and it looks like we're going to open up higher because futures are higher. So we could be up over 13% for the quarter by the end of the day quite easily. And this was after, if you remember, the beginning of the quarter was, of course, January 1. Markets hit an not an all-time low, a yearly low on December 24th. People were panicking about slowdowns and trade wars and everything else. And I remember making the call. It's right in my reports my institutional clients would get. And we said, you got to get back in. Things are finally cheap. So glad to see the quarter work out the way we were not expecting, but just saying it's time to get back in. Okay, there's your morning brief for Friday, March 29th. Let's find some gems.